Hey, what's up, you guys? My name is Klaus, and for those of you that don't know me, I'm a real estate entrepreneur, actor, businessman, and owner of Prestige Properties. We do about 100 million in sales a year. I make these videos and I don't have anything to sell you. My point in making these videos is that I've always been interested in investments, real estate, financial education. I want to make these videos so that I can teach some of the things that I've learned along the way. So I just came back from the Bitcoin conference in Miami, and there's a lot of people that are actually looking at property and looking at the crypto space in relation to how it equates and how relative it is to new property, and as Bitcoin especially, how it's looked at compared to real estate and compared to the new real estate. There's companies like MicroStrategy that are putting it on its balance sheet, holding it as real property, and being able to leverage this out for a return on investment. Now, this is a lot of the same stuff and the same quality values that real estate has been able to afford, and the same type of investments real estate has been able to afford for people over the years. But I'm going to give you 7 reasons why in this video real estate is still the best investment, in my opinion, taking into account riskiness, appreciation, and the overall return of value. So I think I have some knowledge on this topic since I've been a real estate professional for about 15 years, and it's allowed me the opportunity to invest and to sell properties, to be able to follow the dream of acting and be able to create that financial education and financial freedom for myself. So before we get into this video, I need you to invest 1 like on the thumbs up below, because it'll help me with the YouTube algorithm and it'll be the best investment you've ever made. Also, stay to the end of this video because I'm going to tell you how you can actually use, if you are a crypto investor, use your crypto to purchase real estate property. So now let's get into it.
And I think to myself, what a wonderful world.
All right, so number 1, scarcity. Scarcity is the number 1 reason in many great investments of all times. Take into consideration, we only have this one land, we only have one earth that people are able to build land on. So the more that gets filled up, the less land that we have and the more scarce that it becomes. That's why they're building properties upwards in cities like Manhattan and in other major metropolitan areas, because they have no more land to spread out. It's the same kind of concept as looking at, say, Bitcoin, for example. If you're taking that into consideration as property, there's only 21 million coins ever to be made. They can be divisible, but there's only 21 million. Now look at another option, Dogecoin or Shiba Inu. They're infinity. They're just creating more of them. Even Ethereum, they're just keeping creating more. There's no finite amount of how many there are. So those are looked at as less desirable. Same as if you were on the desert and you had one water. That's going to be much more valuable than if you're in a city with infinite running water and water to purchase at a convenience store. So scarcity is the number 1 reason why real estate is still going to remain a perfect sound investment. Number 2, security. So security of investment. People are always going to need a place to live. They're always going to need a roof over their head. No matter how digital we become, unless it's to the point of the Matrix and robots are taking over and we're all living in pods, we're all going to need real property to live in. So number 3, tax write-offs. So in real estate, you can pretty much write off anything. Taxes, mortgage insurance, property insurance. Those are the well-known things. So also the less well-known things to write off, such as property depreciation, the advertising costs to get people into the property to rent it out, the legal fees, the accounting fees, the travel to and from the property. So number 4, appreciation. Now, a lot of times this is looked at just icing on the cake, but if you make a good investment with a good property in a good location, a lot of the times historically, it's just going to appreciate over time. Sure, it's nice to have capital appreciation, and the appreciation historically over the past couple years has been 2% a month, or about 14% year over year, and that's really great, but you can't count on that. So many factors that can affect this include, but are not limited to, interest rates, location, and market demand. So properties tend to depreciate over time, but if you pick sound investments and upkeep them, you can pretty much count on long-term appreciation. All right, so number 5, leverage. Now this is a big one. This is not only using the leverage of your down payment, but also being able to refinance and take money out to be able to purchase more assets. Let's break this down. The first example, say you're buying a $500,000 place, and usually the bank will give you at least 20% loan to value ratio, 20-80, like 80% loan to value ratio. So let's put it into terms, you're buying a $500,000 place and you put down $100,000. That's 20%. Now, it's not talking about, if that property appreciates over time and you go to sell it and it has a 25% increase in the value. Now, yes, that increased to about 500 to 625. That's a good appreciation. However, if you're really thinking about it, it's on your down payment of your first initial down payment of $100,000 that it appreciated 25% of the whole entire capital asset. So now you're taking $100,000 and that pretty much appreciated 125% because your gains were $125,000. In addition, the second example is if you upkeep these properties over time and raise the rents, do things like that, and this appreciates the 25%, instead of selling the property, you can just refinance it and essentially sell it back to yourself while keeping the asset as an investment still, and then use that money to purchase more assets without putting any of your own money in. All right, so number 6, other people paying down your investment. So it's not that you're gonna be paying this month over month, year over year. If you get good quality tenants and you are able to raise the rents incrementally, they are essentially paying down your investment so that you're able to pay off the investment. And then I would never even recommend to have the mortgage paid off. I'd always use that money to leverage it to be able to buy more assets. All right, so that brings me to number 7, cash flow properties. So this goes along with number 6, but if you are buying a good sound investment, you're able to get good quality tenants, raise the rents over time, you have a cash flow property. You should always look at investments of real estate as cash flow properties up front, and then incrementally raise the rents to create even more cash flow, and then to make your property more valuable, to be able to refinance and purchase more assets, and then just keep repeating that process and never stop. All right, guys, so that's everything. The idea of this all, to summarize it up, is to buy good investments of cash flow properties in good areas that are going to appreciate over time. You upkeep them, refinance to buy more, creating generational wealth. Guys, thank you so much for tuning in. This has been great. Also, I told you I was going to let you know one piece of advice. If you are in the crypto space and you do want to buy real estate, but you don't show a lot of salary or yearly income, there's companies out there such as MILO. I'm going to put them down below, as well as Lendin, that will actually give you 100% value of your crypto to be able to purchase real estate property without you selling your crypto at all or having to put in a dime. So I'm going to tell you about that more in the links below. Check that out. And thank you so much for tuning in. If you have not done so already, hit the subscribe button and the like, because it helps with the YouTube algorithm. Go check out below. There's Instagram, Twitter. I'm on there pretty much daily, so you could be a part of it as well. Thank you so much, and talk to you soon.